BlackRock, the world's largest asset manager, sent shockwaves through the financial world in 2024. They announced the launch of the iShares Bitcoin Trust, or IBIT. This exchange-traded fund offered a simple way for investors to gain exposure to Bitcoin. It was a game-changer. IBIT wasn't the first Bitcoin ETF. However, BlackRock's reputation and massive distribution network made it an instant success. By April 2025, IBIT managed a staggering $40 billion in assets. Pension funds, hedge funds, and retail investors flocked to the fund. They were drawn to the simplicity and security offered by BlackRock. IBIT made Bitcoin investing as easy as buying a stock through traditional brokerage accounts. This was a major step towards mainstream adoption for Bitcoin. BlackRock's foray into Bitcoin wasn't just about offering a new product. It was a signal. It signaled that the world's largest asset manager saw value in the cryptocurrency. This validation from Wall Street was a watershed moment for Bitcoin. It legitimized the asset class in the eyes of many institutional investors. Larry Fink, BlackRock's CEO, was once a Bitcoin skeptic. He had expressed concerns about its volatility and use in illicit activities. However, his views underwent a significant transformation. Fink came to recognize Bitcoin's potential as an inflation hedge. He saw it as a digital alternative to gold. Fink's public pronouncements about Bitcoin carried immense weight. His words moved markets. When he spoke positively about Bitcoin, institutional investors listened. Fink's advocacy was crucial in shifting the narrative around Bitcoin. It helped to erode the stigma associated with the cryptocurrency. BlackRock's lobbying efforts also played a significant role. The firm spent millions advocating for favorable cryptocurrency regulations. They pushed for clear rules on Bitcoin ETFs, tax treatment, and custody. This lobbying helped to create a more welcoming regulatory environment for institutional investors. BlackRock's efforts went beyond just talking to regulators. They built the infrastructure needed for institutional adoption. Their Aladdin platform, in partnership with Coinbase, provided secure custody solutions for Bitcoin. This addressed a major concern for institutional investors, the security of their digital assets. BlackRock's entry into the Bitcoin market had a ripple effect. It opened the floodgates for other institutions to follow suit. Goldman Sachs relaunched its crypto trading desk. JP Morgan began offering Bitcoin-linked notes. Even Vanguard, known for its conservative approach, invested in iShares. By 2025, institutional ownership of Bitcoin surged to 20% of the total supply. This was a dramatic increase from just 5% in 2022. The influx of institutional money had a profound impact on the Bitcoin market. It helped to stabilize the price. It also reduced volatility. BlackRock's influence extended far beyond Wall Street. They expanded their Bitcoin investments globally. They partnered with European pension funds, Japanese banks, and Singapore's sovereign wealth fund. BlackRock's global reach helped to spread Bitcoin adoption to new corners of the world. BlackRock's Bitcoin holdings are projected to continue growing. Some analysts predict they could reach $100 billion by 2026. The firm is also exploring new possibilities in the crypto space. They are looking at tokenized assets and advising on central bank digital currencies. BlackRock's dominance in the Bitcoin market has raised some concerns. Critics worry about the centralization of power. They argue that custodial wallets and ETFs give BlackRock too much control over Bitcoin. This, they say, undermines the decentralized ethos that underpinned Bitcoin's creation. Despite these concerns, BlackRock's influence on Bitcoin's future is undeniable. The firm's actions will continue to shape the cryptocurrency landscape. Whether Bitcoin becomes a core component of the global financial system remains to be seen. However, one thing is certain: BlackRock will be a major player in that story.